Welcome to the deep dive. Today, we are cracking open a really dense source excerpts from Verizon's 2024 Form 10K annual report. It's packed with detail.
It really is. A 10K, for anyone maybe less familiar, it's that official filing with the SEC. It gives you the company's own deep look at, well, everything, their business, the money side, risks, future plans. It's the official story.
Exactly. And yeah, digging through hundreds of pages isn't exactly light reading. So that's our mission here.
Yeah.
We'll be your guides through this. We want to pull out the key takeaways, the really important bits, so you get a solid understanding of Verizon's performance and where they might be heading straight from their filing.
Sounds good. We'll focus on how they're structured, the financial performance, their strategy, and what they're doing for shareholders.
Right. So let's start with the structure. How does Verizon actually break down its business in this report?
Okay, so the 10K lays out two main reportable segments. You've got the consumer segment and the business group segment.
Consumer, that sounds like the one most folks interact with.
Yeah, that's pretty much it. It's focused right on retail customers, so your wireless service phones, data plans, that whole thing. But it also covers their home stuff, the wireline services like Fios internet, video, home phone, other bits and pieces for the house.
Okay, individuals and families. So what about the business group then? Who are they serving?
That side targets, well, businesses all sizes, from small shops up to huge corporations, plus the public sector, government agencies, and even other telecom carriers.
And what services are they offering them? Similar stuff.
Both wireless and wireline, yeah, but tailored for business needs. So things like fixed wireless access broadband designed for businesses, data lines, video conferencing, security services, managed networks, and the Internet of Things, IoT solutions. They use their own sales teams, but also, resellers, distributors, system integrators to reach those customers.
Got it. And underpinning both of these segments is Verizon's network, right? What does the filing say about that infrastructure?
Oh, it's massive. They highlight their national wireless network served over 146 million retail connections at the end of 2024, plus a huge global fiber optic network. A lot of focus is on 5G using their C-band and millimeter wave spectrum. They talk about network densification, virtualization, building out more fiber transport. It's a constant upgrade cycle.
It sounds incredibly complex. And they're definitely not alone in this space. The report talks about competition.
Yeah, and it sounds pretty fierce. The 10K is quite blunt about it. You've got the obvious rivals, AT&T and T-Mobile, plus regional players. But then a really big source of competition now is the cable companies Comcast, charter jumping into wireless, often using MVNO deals to bundle mobile with home internet.
Right, the bundle plays.
Exactly. And then you have the tech giants, Microsoft, Alphabet, Apple, Meta, their messaging apps, VoIP, video calls chip away at traditional services, and even newer stuff like low Earth orbit satellite internet and other fixed wireless providers are adding pressure.
It's coming from everywhere. So where's the fight happening? What are the key competitive factors mentioned?
It's a mix. Network quality, speed, coverage, reliability, that's table stakes almost. But pricing and promotions are huge. The report mentions really aggressive deals, bundle offers, trying to poach customers, customer service matters, and also how fast they can roll out new products and services. It's constant pressure.
Okay, intense competition, massive network. How did this all shake out in their 2024 results? Let's look at some trends, starting with wireless retail connections.
Right, so total wireless retail connections did creep up slightly, 0.2%, hitting 115.3 million. But the key number, net additions, new customers, minus those leaving, that dropped significantly, down almost 60%, 58.6% compared to 2023. They ended the year with 370,000 net adds.
Wow, that's a big slowdown in growth, even if the total number ticked up. What about the core postpaid wireless segment, the contract customers?
Yeah, those accounts actually dipped slightly, down 0.6% to 32.8 million. And net adds there were also down 34.2%, landing at 1.3 million. But here's the interesting part.
Go out.
Despite fewer net adds, their average revenue per account ARPA for postpaid went up. It increased 4.4% in 2024, reaching $138.25.
Okay, that's really key. ARPA going up while net adds slow down suggests maybe they're focusing more on value. Getting existing customers onto pricier plans, perhaps. More lines per account.
That seems likely, yeah. Prioritizing revenue from their most valuable customers over just chasing sheer subscriber numbers.
How about customer loyalty? Churn. Did that ARPA increase come at a cost?
Postpaid churn did tick up a tiny bit. Went from 1.03% in 2023 to 1.06% in 2024. Small increase, but maybe reflects that intense competition we talked about.
Right. Okay, let's switch over to broadband. That's a big focus area too. What trends did we see there?
Broadband showed pretty solid growth overall. Total connections up 10.6% to 10 million. But kind of echoing the wireless side, total broadband net additions slowed down, dropping 17.8% compared to the year before, ending at 956,000.
And breaking that down, Fios Internet, their fiber product.
Fios held steady, good growth, connections up 2.3%, reaching 7.1 million.
Okay, but the really explosive growth story seems to be fixed wireless access, FWA, using their 5G network for home internet.
Absolutely. FWA connections just soared,
Yeah.
up a huge 45.4% to hit 2.7 million in 2024. Now, even with that massive percentage jump, FWA net adds also saw a decrease from the prior year, down 14.5% to 846,000.
So even the high growth area saw slowing net additions compared to the peak. Still, FWA is clearly a major growth engine for them.
Definitely. Turning that wireless capacity into home broadband is a key strategy.
So summing up the trends, slowing net additions generally, especially in wireless, but FWA booming, Fios steady. What does the 10K say about where they expect future service revenue growth to come from?
They're counting on more demand for mobile and FWA 5G. They also expect customers to keep moving to higher price plans, plus, targeted price increases, and getting more connections per account. But they do flag that the cost of promotions, specifically the amortization, will likely dampen that growth somewhat in 2025.
Right, those upfront deals have a lingering cost. What about revenue from selling phones and devices? Wireless equipment revenue.
That actually went down in 2024 versus 2023. The main reason cited was just fewer devices sold, specifically a 10% drop in upgrades. It was softened a bit because the phone people did buy tended to be the higher price models.
Okay. And quickly, the business segment revenue. Did that grow?
Actually, total operating revenues for the business segment decreased slightly in 2024. They said it was mainly due to lower revenues in enterprise, public sector, and wholesale. There were some smaller increases in business markets and other revenue, but not enough to make up for it.
Okay, let's pull back to the overall company financials. Consolidated operating revenues for all of Verizon.
Saw a small increase, up to $134.8 billion in 2024 from $134.0 billion in 2023. That reflects the service revenue growth, kind of offsetting the drop in equipment sales.
And key expenses. Anything jump out?
Cost of services was pretty stable. Cost of equipment went down, which tracks with selling fewer devices. SG&A selling, general, and administrative costs went up. Depreciation and amortization also rose slightly. But the really big thing to remember when comparing 2024 to 2023 is that huge $5.8 billion goodwill impairment charge they took in the business group back in 2023.
Right, that impairment charge. That must have had a massive impact on the bottom line comparison. How did net income look for 2024 versus 2023?
Yeah, net income showed a really dramatic jump, $17.9 billion in 2024 compared to $12.1 billion in 2023. And a huge chunk of that increase is simply because that $5.8 billion impairment charge didn't happen in 2024. Better operating results help too, but you absolutely have to factor in the absence of that charge to understand the year-over-year net income story.
The 10K also talks about non-GAAP measures, like EBITDA and adjusted EBITDA. Can you quickly remind us what those are?
Sure. EBITDA is earnings before interest, taxes, depreciation, and amortization. It basically tries to show operating profit before financing, tax, and non-cash charges like depreciation. Adjusted EBITDA goes a step further and pulls out other items considered non-operational, like that big goodwill charge we mentioned. Companies use these to give another view of profitability, often for comparisons, but remember, they aren't standard accounting measures, not GAAP.
Okay. And how did Verizon's consolidated EBITDA look in 2024?
It increased significantly as well, $47.5 billion in 2024, up from $40.1 billion in 2023. And again, like net income, a lot of that increase is tied to not having the 2023 impairment charge, plus the improved underlying operations in 24.
Let's follow the cash. How did cash flow from operating activities shape up? The cash generated by the core business.
Very strong, $36.9 billion in 2024, just a slight dip from $37.5 billion in 2023, so still generating a ton of cash from operations.
And the money going out for investments, including capital spend.
Cash used in investing activities actually went down quite a bit, $18.7 billion in 2024 compared to $23.4 billion in 2023. The main driver they mentioned was finishing up that big accelerated $10 billion C-band deployment program in 2023. So less intense spending on that specific project in 24.
That makes sense. So capital expenditures specifically, what was the number?
CapEx was $17.1 billion in 2024, down from $18.8 billion in 2023. That money is going into network maintenance and upgrades, wireless, fiber, finishing up C-band, densification, and expanding FiOS and FWA broadband.
So if we look at a rough free cash flow number, operating cash minus CapEx, that would be about $19.8 billion in 2024, up from around $18.7 billion in 2023. That's a healthy increase in cash available after investments.
Exactly. That's cash they can use for debt payments, dividends, potentially buybacks, things like that.
What about cash flows used in financing activities then?
That increased a bit, $17.1 billion used in 2024, up from $14.7 billion in 2023. This bucket includes activities like debt repayment, potentially some financing for deals, dividend payments.
They obviously need a lot of capital. How does the 10K describe their debt situation and liquidity management?
Yeah, they state they rely heavily on borrowing. Their long-term debt, not counting finance leases, was down to $141.7 billion at the end of 2024 from $148.6 billion the year before. So they are reducing it. They mentioned raising $12.4 billion through asset-backed debt in 2024, but also making significant debt repayments, $20.3 billion repaid in 2024. They also use credit lines, commercial paper for flexibility, and derivatives like interest rate swaps to manage risk from interest rate changes in foreign currency.
Okay, let's shift to shareholder value and the future outlook. What does the filing say about returning value to shareholders, specifically buybacks?
Well, it mentions they have a share buyback program authorized by the board way back in February 2020. It allows them to repurchase up to 100 million shares.
Okay, so the authorization exists. Did they actually use it in 2024 or recently?
This is a really interesting detail. They explicitly state no. It says no shares were repurchased under this program in 2024, 2023, or 2022. So as of the end of 2024, the full 100 million shares were still available under that authorization.
That's pretty telling. Authorization in place for years, but no action. So how are they thinking about capital allocation moving forward? Where's the money going?
They forecast needing between $17.5 billion and $18.5 billion for capital spending in 2025. And the report says they expect to fund this primarily with internally generated cash, basically that strong operating cash flow we talked about. They do add a little note saying debt or equity might be needed for extra things like the potential Frontier acquisition or just managing their overall debt levels.
Makes sense. What about their core growth strategy going forward? What's the plan?
It seems to center on continued network investment. 5G and fiber are key. Expanding FiOS and FWA broadband further, increasing wireless coverage and capacity, using targeted pricing moves, focusing on customer value. They also specifically mention wanting to improve their prepaid business performance. And that pending acquisition of Frontier Communications is highlighted as a way to significantly expand their fiber network footprint. They expect it to close, assuming regulatory okay, at $38.50 per share in cash.
And beyond just growing revenue, how are they focused on profitable growth?
It's two-pronged, driving revenue, but also actively looking for cost savings and efficiencies. They specifically call out using AI-driven technologies to help with that efficiency push.
Okay. And finally, every 10K has a long list of risks. What are some of the key ones Verizon highlights that could throw a wrench in their plans?
Oh yeah, it's a comprehensive list. Competition is huge, pricing pressure, promotions, new players from cable, tech, satellite. Any delays or problems with their 5G rollout would be bad. Economic headwinds, inflation, interest rates affecting customer spending and their own borrowing costs. Cyber attacks are a major one. They even mention a specific sophisticated attack attributed to a group called Salt Typhoon, showing how real that threat is.
Wow, they named the group.
Yeah, which emphasizes the seriousness. Also, physical risks like damage to infrastructure from disasters or conflicts, supply chain disruptions, regulatory changes are always a big watch out. Broadband rules, net neutrality debates, climate policy, privacy, data security, even AI regulation now, plus potential for major lawsuits, changes in financial markets affecting borrowing, pension costs, tax law changes. It's a lot.
It certainly is. So wrapping this up, we've peered inside Verizon's 2024 10K. We've seen their main business arms, the consumer and business segments, looked at the financial drivers, including how that big 2023 impairment charge impacts comparisons, seen their huge network investments in 5G and fiber, and gotten a sense of the really intense competitive and regulatory world they operate in.
Yeah, hopefully this walkthrough gives you a much clearer picture, using their own words, of how this communications giant operates, how it makes money, where it's investing for the future, and the significant hurdles and opportunities it faces.
And maybe a final thought to chew on. You know, given this relentless competition, the sheer speed of tech change with 5G and AI, and just the enormous sums of money needed for these constant network build-outs and upgrades, how does a company like Verizon manage that balancing act? How do they juggle these massive long-term infrastructure bets with the market's demand for steady, short-term financial results and shareholder returns? It feels like a really high-stakes tightrope walk, constantly buffeted by the market, regulators, and these growing cyber threats.